You referenced as you go through the due diligence process in terms of selling one's company, bringing in a collection of experts in accounting, finance, law, and the like. I guess my question is, I've seen people fail at this. Can you kind of give us some compare and contrast on those who have done this well and those who have done this poorly and have failed at it?
Yeah, this is one of the biggest problems. I wrote an article for Forbes about it. I call it the arrogance of success, the accidental arrogance of success. And so, hey, let's be honest, that person that built that business, they beat the odds. They were one of only 7% that beat 1 million. They may have been one of only the 4% of those that beat the 10 million. Their success is rare. It should be celebrated. But unfortunately, I see it happen too often where that entrepreneur who was successful in their business then somehow thinks that their success building that business translates to, I'm now an expert in everything. And I don't need, I can use, my lawyer I went to high school with, I played golf with on Saturdays, and he helps me with slip and falls. He helped me organize my LLC and, did my trust and my third divorce, whatever it is, it's like we have this little bit of an arrogance of success that we think we've arrived. We don't need help. And I tell people, boy, when you're selling your business, the other side of the table has got the world's most sophisticated investors on the planet, and they know what they're doing. And so I'll use some examples. In a purchase agreement, one business attorney may drop 5 word changes into an indemnification clause or some part of that purchase agreement on purpose. And I'm going to make it an egregious one-sided agreement. And I'm just going to throw it across. And what I'm expecting is the attorney on the other side to say, not on my watch, buddy, and mark these 5 things off. I'm no rookie. I know what the hell I'm doing, right? And when that thing comes back and those 5 words aren't touched and, their focus is in the wrong areas, well, then that, attorney knows, hey, look, I got a novice on the other side and I'm going to take, it's like, hey, we both have counsel. And
Yeah.
I'm a good person. I start always with, let's start with an agreement that was fully negotiated with someone else. So I'll go to my shelf and I'll say, this deal kind of looks like that deal. Let's pull this fully negotiated deal off because I want to get to a closing table. And I don't want to start here. I want to start here so that I can limit the amount of time that the cab meter is running on the law firms. Let's get to fair, reasonable, and customary. But not every buyer's like me. And there are people out there who can detect in a matter of minutes that they're dealing with a novice, they're dealing with an unsophisticated advisory team, and they'll take advantage of that team, which is their right. Everybody's got counsel. They pass the bar. There's no reason why I can't write a one-sided contract for my client. And so I that's one example from a law perspective, but I see this happen too. So entrepreneur wakes up one day, they say, I'm 67, time to go, time to sell the business. And, let's do it. My phone rang, I woke up and said, I'm going to sell it. My phone rang and some random, private equity weenie, or some buy-side advisors on the other side. And what's the chances that I picked up the phone and that's the right buyer who's going to maximize my potential and give me the kind of deal I want that gets me strategically where I want to be in my life? And the answer is probably 0, probably 0%. And so I see this happen all the time. And then that entrepreneur, hey, he lives in California and he says, you know what, I'm going to sell right now. And my phone rang and I'm going, and I'm going to hurry up and buy a house in Nevada. And then I'm going to declare my residency as Nevada, and I'm going to try to game California out of their, 13% capital gains tax, on my $30 million sale. And let me tell you, the state of California is not going to fall for that one. And it happens every day. It's happened to me just in the last few years where an entrepreneur called me. He's like, hey, I'm going to buy a house over there. And I'm like, boy, it's like, this is not how the game's supposed to be played. We need to think about an exit, if ideally, 3 years in advance. hopefully we started our business building it to a certain exit point or with an exit in mind. But if we didn't, it's okay. I can get a business ready to go in about 6 months. It's not it happens all the time. But ideally, we want to spend about 3 years. We want to clean up our financials. We want to bring in an accountant, an accounting firm that does transaction services, advisory work. I want to get a sell side Q of E done. I want to take Uncle Jimmy, who died 5 years ago, but still on payroll. I want to get him off payroll. My wife, who's never stepped in the company, but she's got a $200,000 a year salary. I got to get all my adjustments, right and in order. When I'm running my business, my goal is I don't want to pay taxes. When I'm selling my business, my goal is to maximize the value potential of that business. I need to identify all these adjustments, make sure my accounting is being done appropriately, get a sell side Q of E, talk to some investment bankers, find out what companies are selling for in my industry, who the potential universe of buyers is. I was working with a client just in the past month, and we're going to market. We talked to 7 different investment banks. We let 7 different investment banks pitch us. Each one of us told us who they think the top 30 buyers are. I now have this spreadsheet that's got, about 60%, kind of overlap and about 30% outliers, 40% outliers on each sheet. And it's like, this is probably my universe of buyers. And I've got 7 different reads on valuations. And although I'm only going to choose one banker, what I really have done is I primed the pump. And now these other 6 bankers, if they want to get paid, right, they got to hurry up and run to their favorite buyer and say, there's an asset coming to market, sign me up as the buy side advisor, and I'm going to get you into this process. And so bankers only make money if a deal closes. And so I'm priming the pump, getting the universe ready for this company that's coming to market. It's like there's all these intricacies and things that we need to think through. And unfortunately, most entrepreneurs just don't think ahead. It's like playing chess with Bobby Fischer and you're a novice. It's like you need to look and think 13, 14 moves ahead on this chessboard in order to play well. And unfortunately, too many entrepreneurs just don't take the time. They spend 20 years, 30 years building a business, but they don't take the time to exit it properly.